So welcome to Market Outlook for the week. We're going to look at some pairs that we are expecting movement within the week. So first thing first. First things first, I want to check the news, the economic calendar for the week, since it actually affects. So from what I'm seeing from so it's going to be a busy week, starting on Tuesday. On Monday, we just have this chef news by 8:30 a.m. Then on Tuesday, we have GBP, then we have USD. The red simply shows it will be a high impact news. So same thing on Wednesday. It's also going to be a busy day on Wednesday for AUD, GBP, and then the USD later in the afternoon. So the same on Thursday for the AUD, then the USD. So it's going to be a busy week from the economic calendar. So it's always good that before you do anything technically, you want to know what we are expecting fundamentally, because these are actually market drivers. So they are market drivers that we're expecting to move the market. So going into the week, I also want to know, let's see what we are expecting from the dollar index. From the dollar index. So from what the dollar index is doing or did last week, where the dollar for weeks or months now going back to November, the dollar was actually coming down seriously. The dollar was coming down seriously since November, but this was last week. From last week, it started making an upward move. Usually from the way the market moves, when we have an impulse like this, or the market moving in one direction, we expect that it should make a retracement. It should make a retracement before the continuation. That's the way the market moves, the market delivery. But after this impulsive move that we got from the dollar, from the DXY, it really did not make that enough pullback. So it started coming down. It started coming down rather than giving us a pullback. So it started coming down. So this is what is called a channel. So if after an impulsive move, rather than making a pullback, the market continues going down, but not in an impulsive way. if you notice the difference between between this drop and the way it is dropping here, this is not really impulsive. So, but this is an indication. Is an indication that when the market forms a channel after an impulsive move, it is actually an indication that we are expecting, we are expecting a reversal. This is actually a reversal pattern in the market. So that does not necessarily mean that you want to base all your trading decisions based on patterns like maybe the channel, but looking at what it has done, especially the fact that the time frame we are looking at is the daily, which is a higher time frame. It's a high time frame. So just focusing on, I'm just interested in this move. I'm interested in this move that happened between last week and the week that just ended, because by 11 p.m. today, we expect the market to open. So this move actually started last week. So I'm interested. Let me just focusing on this move from what we've seen from this. If we are focusing on this high and this low, we are actually expecting a move to as high as at least to this level. We're expecting a move at least to this level to give us a pullback. So we're expecting a move as high as this, but since this is a higher time frame, the daily, so we don't expect that the week we are entering that we'll just get this complete move. So, but we can take as little as we can get within the week. So the important thing is to just understand what the market is doing. So looking at this, we've seen that we had a move downward. We had a move that did not really give us a pullback, but it started coming down little by little for months. November, December, January, for 3 months, the dollar index was just simply coming down. But the market doesn't come down that way. So it comes down, it goes up, it makes an impulsive move, it gives you a pullback. So now, applying that same rule here. So we had a move 1, 2, 3. 3 consecutive days, we had the market making an impulsive move. So we can consider this an impulsive move, because if we reduce it to a lower time frame, like the 4-hour, you can see the move. So it becomes, this is an impulsive move. So now the way the market delivers price, the way the market moves, when we have an impulse like this, we expect to get a pullback. That pullback hasn't really come. So we can check to know if what we've already gotten is a pullback. So you can pick up your Fibonacci. It helps. So since we are looking at this, so between this low down to this high, the low to the high, so the market hasn't really, this cannot be considered a retracement or a pullback. Reason because from the Fibonacci, before we consider this a pullback, it should retrace to at least the 50 level. So that it has not done. So the retracement is between the 23 and the 38 retracement level. So meaning that no matter what the market will do this week, we are expecting that it should give us, after this impulsive move, it should give us a retracement to at least this level here. So it can come as low as this. can come as low as this. So the way I look at price, for now I will consider this what it has done at this point here. I will consider it to be a consolidation. So I want to see it come below the 50 down to the at least the 60. So from the dollar index, the dollar index is what really determines how the pairs that are quoted with the USD, how they move. So what I want to see from the dollar index, so I want to see it come lower, should make that complete retracement. So we might just see it maybe probably come down to this level, then come here before it will come lower. That's probably what we might see on Monday. For the dollar index. And then after that, we expect that move. Down to at least the 50 level. So with that, so the dollar index moves exactly opposite the Euro USD. So if the dollar index is going up, the Euro USD will be coming down. So if we apply the same thing, we're just looking at opposite of what? The dollar index. So I want to see the Euro USD. Come down to this level and then go up. So the period that the dollar index will be making that pull up. So when you just see it, for the pair that will be keenly looking at is will be the GBPUSD. I'm really interested in this. Within the week, I actually expected it to trade as high as the 1.2285. I expected to get to that level, but it didn't. It came close and then made this pullback. So going into the new week, I want to see GBPUSD to complete this move. I want to see it complete this move. So this is what you can actually keep your eye on that. You want to watch out for that. So there is possibility of even coming as high as this. So I want to see how that reacts. I will be watching it during market opening. When the market opens this evening, I want to see how it reacts, how the market will open. Because I see it coming as making this move within the week. You know, one principle in trading that when you begin to apply it to your trading, you begin to see improvement is less is more, less is better. Less, trading less. So we don't really need so many trades in a day or so many trades in a week to be profitable, because that is one of the dangers when you feel that you need to enter so many trades within the week. So for me, if I succeed in getting a move, getting just one move, I am okay for the week. So it's actually hard, but it's something you can start integrating into your trading. Look for the best moves within the week. Like on a Sunday like this, you can look for the best moves and position yourself. Hit it and stay on the sideline. Okay, so is there a pair you want me to look at? A pair you like to trade that you want me to look at? Is there a pair you trade that you want me to look at? Gold. Okay. All right.
Yeah, gold and crude oil.
And crude oil.
Yeah. Yes, sir.
Okay. So just applying the same principle I outlined when breaking down the dollar index.
Yes.
Gold, we had this drop. We had this drop on gold. I remember when I was holding having my mentorship call with some students on that was on Thursday. Gold was around this point here, and I highlighted this. That I expected gold to come lower, but then it actually has gotten to our point of interest. So going into the new week, so we can consider the whole of this. We can consider the whole of this as one move. Please mute yourself so that you don't disrupt the recording, please. If you want to ask questions, then you can unmute yourself. Okay. So we can consider the whole of this as one move. So after a big move like this, we expect that there should be a pullback. There should be a pullback. So if we pick our fib, swing from the high down to the low, we expect at least a retracement into the 50, the 62, or even the above. So at least to this level. So as long as we've gotten this impulse, so what we'll now be looking at. So this is what I'm expecting gold to do going into the new week. I want to see it. I want to see it. For now, I will not be looking for sell since we've already gotten this big move. I want to see it give us reason to position ourselves for a buy so that we can get this pullback from the big move, the big impulse we've already had. So for gold, look out for this pullback. Watch out for buy for gold. So for the week, I think it has already given the sign. The sign is already here that it wants to buy. So for the week, we might just see it at least. You don't need to catch all the move. You can take it as high as this. Just watch out. When you see it buy up to this level, well, for it to be considered a complete retracement or the retracement, it should come as high as this and above. So watch out for buy for gold going into the new week. The buy is due. Okay, so the next one is crude oil. It's really been long. I looked at crude oil. So let me see. US oil. US. It's been a long time. Okay. Like I said, that has been long. I looked at the crude oil. Okay. Well, I see it between Monday and Tuesday. I just okay. So much liquidity here. So I want to based on this move that we've seen in crude in crude oil. I see it filling up this gap. I see it filling up this gap, and then going down, something like this. But there is actually, it has potential to go up. But into the new week we are entering, it may not really give a very good entry because of the way it has moved, except maybe we are projecting it into not just next week, but if we are looking at next week, it may not really give a very clear entry opportunity. That's if you're looking at trading it into the new week, in the new week. Okay. So I see it going higher to fill up this gap that has been created here, and then possibly coming lower to cover up I see it coming, going up to fill up this gap, and then coming lower. That's what because this entire move, we've not had a retracement of this entire move that has gone up for days 1, 2, 3, 4, 5. So if for any reason we might still see it come lower first, we decide to come lower first, it's much better. Okay, based on what I'm seeing here, I think the best it can do for someone, if you really want to, trade it within the week, if it comes at market opening, it comes down to this level first, then you can look at maybe taking it up to this level, to this point here, or possibly even blowing out these highs that are created here. So, but if you see it within Monday and Tuesday, instead, rather than going up immediately, it just comes lower to a level like this. If it comes to a level like this, then you can look at buying it down to this 81.37 level. Okay. All right. So that will be it for our market outlook for today. So you can watch out those pairs to see how they behave during the week. The ones that gives you entry opportunity, that you can look at taking them. All right. Good night. See you next Sunday for another market outlook.